If you walk down Main Street today, in February 2026, you see a very strange paradox. The stock market is technically near all-time highs. The news anchors are smiling. The government says GDP is growing. But look closer. Look at the for lease signs in the strip malls. Look at the price of a simple bag of groceries. Look at the credit card balances of the average family. We are living in what historians will one day call the silent depression. The numbers on the screen are going up, but the standard of living is crashing down. They told you inflation was transitory 5 years ago. They lied. They told you the Federal Reserve would pivot and save the housing market. They lied. And they told you that a diversified portfolio of 60% stocks and 40% bonds would keep you safe forever. That was the biggest lie of all. If you are still holding government bonds in 2026, expecting them to protect you, you are holding a burning match. The old rules are dead. The 60-40 portfolio died the moment the U.S. debt crossed 40 trillion. So, what do you do now? You don't panic. You don't hide cash under the mattress. You build a fortress. Welcome back to Crucible Markets. If you have been watching this channel, you know we predicted gold crossing $5,000. We predicted sticky inflation. But today, we stop analyzing the problem. Today, we give you the solution. I am going to give you the exact blueprint for the fortress portfolio. We will break down the percentages. We will look at the specific assets, beyond just gold, that you need to own to survive the rest of this decade. This is not financial advice. This is a survival manual for your wealth. Before we build the new house, we must tear down the old one. For 40 years, from 1980 to 2020, investing was easy. Interest rates went down. That meant bonds went up, and cheap money meant stocks went up. You could be a genius just by buying an index fund and going to sleep. But that era ended in 2022. We are now in a secular bear market for sovereign debt. This means that when stocks crash, bonds also crash. They no longer balance each other out. We saw this in 2022, we saw it again in 2024, and we are seeing it now in 2026. Most financial advisors are still using the old playbook. They are putting you in assets that are mathematically guaranteed to lose purchasing power against inflation. They are focused on nominal returns, getting more dollars. The fortress portfolio is focused on real returns, getting more purchasing power. A fortress is built on 4 pillars. These pillars are designed to hold up the roof no matter what the weather does. If we have hyperinflation, the fortress stands. If we have a deflationary depression, the fortress stands. Pillar 1, hard money known as the insurance. Pillar 2, productive assets referred as the engine. Pillar 3, chaos hedges, the moonshots. Pillar 4, liquidity, the real war chest. And there is a secret 5th pillar that almost no one talks about, which I will reveal at the end. It might be the most important one of all. The first pillar is hard money. This is gold and silver. In a normal world, traditional advisors tell you to hold 5% in gold, just as a hedge, they say. In the environment of 2026, holding 5% is negligence. It is financial suicide. We recommend a 25% to 30% allocation to physical precious metals. Why so high? Look at the geopolitical board. The BRICS nations have expanded again. They are settling oil trades in gold-backed currencies. Central banks are buying gold because they know the dollar is being weaponized. If the central banks are putting 20% of their reserves into gold, why would you hold less? You are betting against the house? The split? I recommend a 2-3 gold and 1-3 silver split. Gold is your savings account. Now that it has broken the $5,000 psychological barrier, the media is finally paying attention. But the real move hasn't even happened yet. Gold is the anchor that prevents your portfolio from drifting away in the flood of printed money. Silver is your leverage. At $80 an ounce, silver is finally waking up. But remember, silver is essential for the green energy transition. Solar panels, EVs, military tech, they all need silver. We are facing a massive structural shortage. The mines cannot produce enough. When the industrial panic sets in, silver will outperform gold by a factor of 3 to 1. Crucial warning, do not buy paper gold ETFs like GLD or SLV for this pillar. Paper gold is a promise. Physical gold is a possession. If the market breaks, paper contracts will be settled in cash, not metal. You will get worthless dollars back, not the gold you thought you owned. This pillar must be physical. It must be in your safe or in a private, non-bank vault in a jurisdiction you trust. You cannot eat gold, and gold does not pay rent. That is why the biggest part of your fortress, 40% to 50%, must be in productive assets. In the 1970s, stagflation, the general stock market went nowhere for a decade. But value stocks, companies that dug things out of the ground, made fortunes. We are in the 1970s on steroids. 1. Energy is the new currency. The world is starved for energy. The green transition has failed to provide reliable baseload power, and AI data centers are consuming electricity at a terrifying rate. This means oil, natural gas, uranium, and coal are going higher. You want to own the companies that produce these resources. Exxon, Chevron, uranium miners. These companies pay dividends. They pay you to wait. As inflation rises, the price of energy rises, and their profits rise. It is a natural inflation hedge that pays you quarterly. 2. Farmland and water. Real estate is tricky in 2026. Mortgage rates are high, and commercial office space is a disaster zone. Do not buy a speculative condo in a bubble city. Buy farmland, buy food production. If you can't afford a farm, look at REITs, real estate investment trusts that own farmland. People can stop buying new iPhones. They cannot stop eating. In a currency collapse, the man who owns the soil is the king. 3. Defense and cybersecurity. Look at the news. The world is becoming more kinetic. Wars are breaking out over resources. The defense budget will never go down. Cybersecurity is the new front line. Allocating a portion of your portfolio to the military-industrial complex is a grim but profitable reality of the 2020s. This pillar keeps you fed. It pays the bills while the dollar loses value. It generates cash flow. Now, we add the spice. Pillar 3, chaos hedges. This is 10% to 15% of the portfolio. This is where you take asymmetric bets. Bets where you can lose 1x your money, but you could make 10x or 50x. Bitcoin. Bitcoin is currently fighting volatility, but the thesis is stronger than ever. In a fortress portfolio, Bitcoin is your schmuck insurance. It is your insurance against the banking system closing the doors. It is the only asset that is digital, portable, and has no counterparty risk. If Bitcoin goes to $1 million per coin, which many models predict by 2030, this 10% allocation will save your entire portfolio. Gold mining stocks. This is the hidden gem of 2026. For years, mining stocks were terrible investments. Energy costs were high, and gold prices were suppressed. But with gold at $5,000, their profit margins are exploding. They are printing cash. Junior miners are risky, but they act like a leveraged option on the price of gold. If gold goes up 10%, miners can go up 30% or 40%. But be careful. Volatility here is extreme. Do not put your rent money into a junior miner. Finally, Pillar 4, liquidity. This is short-term treasuries, T-bills, or cash. Wait, didn't I say cash is trash? Yes, long-term cash savings are trash, but short-term liquidity is a weapon. We are in a volatile world. We might have a flash crash next week where stocks drop 20% in a day. If you are 100% invested, you are trapped. You cannot buy the dip. You need a war chest of dry powder, roughly 10% to 20%, earning 4% or 5% interest, ready to deploy at a moment's notice. When the market panics, stage 3 of the collapse, cash is king for about 6 months. Distressed sellers will sell you their assets for pennies on the dollar because they need cash. You want to be the buyer in that scenario, not the seller. You hold this cash not for investment, but for optionality. I promised you a 5th pillar, and this one isn't something you can buy on a stock exchange. Pillar 5 is you. It is your resilience and your jurisdiction. If you have millions of dollars in gold, but you live in a city that is collapsing into crime and chaos, you are not wealthy. You are a target. If you have a fortress portfolio, but you only have one passport, you're trapped by one government's laws. The ultimate diversification is political diversification. Get a second passport if you can. Get residency in a safer state or country. Build skills that are useful in a depression. Gardening, mechanics, medical skills, negotiation. The fortress isn't just numbers on a screen. It is a mindset. It is the ability to say, I don't care what the Federal Reserve does. I don't care what the White House does. My family is safe. This is the blueprint. 30% hard money, 40% productive assets, 15% chaos hedges, 15% liquidity, and 100% personal resilience. It is boring, it is simple, and it works. It won't make you a millionaire by next Tuesday, but it guarantees that when the dust settles in 2030 and the dollar has been reset, you will still be standing. You will be the one rebuilding. Stop chasing the hot stock of the week. Stop listening to the TV pundits who tell you everything is fine. Look at the price of gold. Look at the debt clock. Look at the grocery store. The evidence is all around you. In the next video, we are going to zoom out to the global stage. We are going to look at the geopolitics of 2026. Why is the Middle East heating up again? Why is China dumping US treasuries? And how does war affect your fortress? If this blueprint helped you see clearly, hit subscribe. And I want you to do one thing today. Look at your own portfolio, calculate your percentages. Tell me in the comments, which pillar are you missing? Are you heavy on stocks but zero on gold? Are you all crypto and no cash? Be honest. Stay skeptical, stay prepared, and start building.